In this episode of Power Charting, we are going to review 2019 from a slightly different perspective. Bogomazov and I do a weekly webinar series throughout the year, which is called the Wyckoff Market Discussion. And we have an hour-and-a-half long webinar with students, and we look at all of the different markets. And so we're going to go back and sort of do a summary or review of how 2019 went and some of the more interesting things that happened. And so with that, welcome to Power Charting. I'm Bruce Fraser, your host. Roman, welcome to Power Charting.
Thank you, Bruce. Good to be here.
So we get to do this all year long on Wednesday afternoons, and we do it live. And so the thing I want to tell you about Roman is that Roman is one of the premier educators on the Wyckoff methodology in the known universe. And Roman teaches a series of classes, which he's going to take a minute to tell you about. And he does a number of other educational events throughout the year, which are very, very valuable to Wycoffians. So with that, Roman, welcome to Power Charting.
Thank you, Bruce. Again, good to be here. Really quickly, I'm going to tell you about 3 classes that we have. The main class that I would like you to attend, and this is today's content is going to be from this class, Wyckoff Market Discussion. We conduct it together with Bruce each Wednesday at 3 p.m. Pacific. This is an hour-and-a-half weekly review of the markets. We talk about overall market. We talk about different stocks, different industry groups, sectors, commodities, so everything that is of interest to us for our trading. If you would like to attend a free session, January 8th is going to be announced as a free session, so we would welcome you to come to this session and check out our market outlook for 2020. And we're also going to start the new cycle, which we start with the Wyckoff Trading course, part 1. And that session is also free. Please, you're welcome to attend. And the practical part 2 of the Wyckoff Trading course starts on January 7th. And also, the first session is free. And as usual, if you guys already, watching this, you're familiar with Bruce's Power Charting episodes that come out each Friday. Bruce?
Well, Roman, tell everyone where to go, how to sign up for these 3 free events.
Yeah, absolutely. Go to our website, wyckoffanalytics.com. Sign up for the Wyckoff Market Discussion. Or if you have any questions, email us to wyckoffasociate@gmail.com, and we would gladly answer your questions.
Cool. So it'll be great to have everybody join us on January 8th. And we discuss the markets in real time. So when we get together on Wednesday afternoons, 3 p.m. Pacific time, we're going through the markets real time. So everything that we're looking at here today is going to be a review of the past year, but just remember, keep in mind that we're looking at these markets as they're unfolding in the class. And of course, we're asking our attendees to ask questions and to make comments. And you're going to see some example of their submissions also. So what do we have here, Roman?
Well, this is the usually first segment that we start WMD with each Wednesday. We just want to look at the markets, and we usually look at all 4 markets: the S&P, NASDAQ, Dow, Russell 2000, and then we go into any type of supporting evidence of where we are with the bias. So this is one of the latest views that we had actually last week. Something that also was tweeted out, and we've talked about for almost 2 years now, the trading range that has been formed in 2018 that had a shakeout type of action that attracted a lot of institutional types to buy into long-term campaign positions that created the momentum rally into the sign of strength, and then had a pause for several months of the backing up action. And we talked a lot, and Bruce has done a lot on the PNF. So the campaign count that we have at the bottom of this trading range, and then the count at the backing up action confirm each other. And also, if you look at the trend lines, they all point to one price right here, 3,500. So we might have some kind of acceleration of price once we overcome this area right here. This is where there are a couple of trend lines converging, so we would be expecting some kind of at least a short-term pause there. Bruce?
And as we would see this trend unfold, which took place through all of 2019, to see it accelerate into some kind of a short-term or a minor buying climax would be expected.
Absolutely.
Yeah.
Well, let's look at another segment. So if we start with the markets, what else do we do in this particular class? We have a very interesting segment that we call Anatomy of a Trade. This is where the whole class together trades one stock, and we pick the stock, and it's NVDA. And we started this exercise on June 26th. So we are showing you here exactly this first slide where we have taken this position as a class. And the discussion in the class goes around the Wyckoff analysis. And again, as Bruce has said, in real time, we are actually commenting on the events, and students contribute by voting in the poll, whether we're going to keep this position, add to the position, decrease position, or close this position. So Bruce, I think, from a teaching point of view, this is a very great pedagogical tool, with students to do in real time each week. It just kind of touches on a lot of things, on the analysis, on the process, on the trading plan. What are your thoughts on this segment?
Oh, this has been so valuable and a lot of fun. This was Ramon's idea to do this, and so he saw this point on the NVIDIA chart that was a classic entry point, which is one of the things that we really want to teach to our Wyckoff students, is how to identify the proper entry point where you can place trades and then put stops at an appropriately close area where they're likely not to get hit. And so you can see on the bottom chart, that's an intraday chart, and the top chart is a daily chart. And so we've zoomed in, shown where Ramon actually entered the trade. And from there, Ramon, don't we have additional?
Right, this is
Yeah.
where we are.
Yeah, so show them where the original entry is. So you can see that that's beautiful. It's like right off of the turn in phase C, and phase C is where the uptrend begins, and the classic place is on the turn off the test. And so you can see there that there's a beautiful test that occurred, and in real time we picked up that entry point, and it had a good run up, and then it came back in for another last point of support in phase D. And so Ramon, pick it up from there.
Yeah, we kind of had a little bit of a hiccup right here around earnings, just because we decided to trade it, as is, as kind of like, the class is gonna go for it. And the consensus was just get out of this for a second. And then we've picked it up again here, and we're still in this position. So this is a great example of how to actually show the application of all of the concepts and the ideas that we discuss in other classes, which could be more theoretical in nature. So Bruce, I thought that this is a great exercise. It's going really well. I thought that, The group has done such a great job of staying in the position, adding to the position. So it's just been very valuable exercise.
I would actually say that the attendees to the series have done a really good job in the polls of getting it right about what to do. And so you look at a poll and you say, oh, you want to be contrary. Well, you don't want to be contrary to this group because they have been really spot on in terms of the appropriate actions to take at the right times.
And by the way, one more kind of like insight on this segment is that Bruce and I, we take trades around, actual trades around this position as well. So it's kind of fun for the group also to observe some of our trades that happen. So it's just, a lot of fun. All right, well, let's go to the next segment. And Bruce has mentioned student submissions. These are extremely exciting, charts that you guys send us. And here is one of the example, Bruce, from one of the most recent, maybe like 3 weeks, 4 weeks session. This is MAXR Technologies, and it was sent by Dimitri. And I just love the work that is being shown by students here because there is an understanding of the overall long-term structure. There is a volume analysis, whether it's vertical or horizontal. There is references to the momentum and relative strength. And then we have the cause building and understanding of what kind of potential the stock might have. I thought this was such a great submission, Bruce.
I did too. And many of the submissions, most of the submissions are really very interesting, compelling work. Attendees are not required to submit, but they can choose to, and then we will evaluate and comment on their submissions to the group, but always with the idea of trying to help them to ever improve their technique. And so, we'll often comment on, say, point and figure technique. If there's something that we think should be done just a little bit differently, we'll comment on that so that the student, everybody in attendance will get the benefit of the nuances or the mastery elements of doing the analysis as correctly as possible.
Absolutely. And as we go through the analysis, we just kind of commenting on your work, but sometimes we have such submissions where we spend, 15, 20 minutes on just the topic just because it's just so interesting. So sometimes it just has its life of its own, all of these submissions, and we are so happy and appreciative that you guys do that. All right, well, let's go into some of the memorable calls that we had, or memorable discussions in 2019 and WMD. Bruce, we started with still a downtrend in lag, the reaction to the downside within the larger trading range. And you had a PNF that was pointing to the target on that down leg and from which we started the rally. So how did we go through this moment, that transition, the reversal?
Well, the redistribution with the hinge that we pointed out really was a classic distributional formation in Wyckoff terms. And so we won't go into detail here, but you can see that the point and figure analysis took us right into the zone of the count and did a wonderful job of telling us where the count was likely to go. And then to the right, you can see this is the Dow Industrials. The count on the left is the S&P, but you can see the downtrend just persisting. The chart on the left is daily data. The chart on the right is 5-minute data. And both work, both have their value. And so we've looked at this chart on the right, but just to make the point that there is a beautiful accumulation count that we published, we talked about these counts as they were occurring in the Wyckoff Market Discussion. So we're doing this real time and going through the analysis as the market is unfolding. So you can see the chart on the right is unfolding, completing an accumulation type structure and giving us a count. And we went into this in great detail in the class. And then of course, we have just now, at the end of the year, this chart was done at the beginning of the year. At the end of the year, we've just entered the price objective zone for this count. So right at year end, which is fascinating.
Yeah, that was a really interesting chart, Bruce. And as I recall, and even now looking at this chart, my first thought that comes here is, what is going on with this volatility here that creates such a great big count on the 5-minute PNF chart leading to the year-end targets? And it just shows you how much of the oversold condition that was. It was so extreme that institutions saw extreme value, and they were buyers on the way down and they were buyers on the way up. And that's what kind of like, started creating all of this wiggles within the PNF chart and created that tremendous count. So
And
that
so,
was a very interesting event.
so imagine a count where the count line is 22,665 and the low was around 21,700. And imagine a count like that counting all the way up to 28,000 to 29,000 and being a price objective. It's almost unbelievable that this kind of a price objective could be hit, but here we are at the end of the year and we are in that price objective zone.
And I would say, Bruce, that what's unbelievable to me on this is it's a 5-minute chart. It's not a daily like we have here on the redistribution count.
Yeah.
So it's just a very interesting spot in the structure where volatility was so aggressive that the counts had to be measured on a smaller time frame to capture that.
And that downtrend, just one last point, the downtrend, you can see the trend lines in the downtrend on that chart and the throw under of the channel at the bottom, which is a climactic event, produces an oversold condition, and immediately it reverses that oversold condition, which is a sign that there's demand that's coming in at that point that's supporting the market and is likely to continue to do so for some period of time.
All right, great. What else did we look at that time, at the beginning of the year? So we are here somewhere on the test of the lows, and we're bringing up an analog example of a potential rally that might come. An example from Tesla, where we have an uptrend and then we go into the reaccumulation texture. This is where there are a lot of reaccumulation type of signals. And then we go into the upthrust and local distribution with the subsequent reaction that looks very damaging, looks something what we've seen here in the market action. But because, again, of the overall value proposition here, institutions are having a buying fist, and they are buying into this oversold condition with a lot of strength, and that develops a big rally in the momentum. Another example of this rally could be seen in the Dow Industrial in the 70th, in this prolonged trading range. And usually after that, we would have some kind of area of the reaccumulation after the aggressive rally, and then continuation of the uptrend. That was the premise for the whole year, and it kind of worked out. Bruce,
yeah, that was a great analog, and that was your analog.
And also, there were some other things that we've considered. One of the things, and both of us talked about this, Bruce was talking about this, was the third turning. The way how the trading range unfolded reminded us of how it unfolded before in this secular uptrend in 2011-12 and 15-16. And we didn't see any violation of the uptrend, even on this shakeout action. So the assumption was that the price would just reside in the non-trending manner for some time and then continue to the upside.
And also each one of those reaccumulation structures lasted about 21, 22 months. And at the first time that we showed the third turning, it was at about 18 months. And it did persist on to that 21, 22 month extension of time before it committed itself out of the reaccumulation trading range, which I thought was fascinating.
Right. Then there are so many similarities between these three areas. So if you'd like to study those three, you definitely should. And then, the question that comes to us very often is, well, is this a distribution? When are we going to see the distribution? So whenever this pattern breaks and the price behaves in a different way and it cannot recover out of this oversold condition, that's something different. And that's, going to be a different comment for us at that point of time. But we also looked at, and Bruce, this is just such a great work by you here on the inversion of the yields and how they are related. Also, how treasury yields in the relationship to the S&P yields pinpoint those oversold conditions, those market conditions that lead to significant advances. So walk us through this.
Well, the purple line, top left, is the U.S. Treasury 20-year yield. The red line is the S&P 500 yield. And what was being demonstrated by putting these two yield instruments together is that whenever the U.S. Treasury 20-year yield dipped below the S&P 500 yield, it was a measure of value in the S&P 500 or the dividend producing stocks. And what our contention is and has been in WMD is that there's a whole new class of stock buyers that are coming into the stock market, which are they are bond people and bond institutions that are saying, I can go over to the stock market and I can buy good quality stocks that have good dividends, that are growing their dividends, which also has the effect of growing their stock price. And so I'm going to go over into the more dynamic area of dividend producing stocks and put some of my bond money to work there. And so we have been demonstrating how money and relative strength is flowing towards the dividend stocks and actually is flowing somewhat away from the growth stocks, which we are measuring by looking at the FANG type stocks. And so we're seeing a rotation going on. And this is very exciting because we think this is all new money that is coming into the stock market from the bond market, which is a huge market. It's bigger than stocks. And so this is creating a whole new class of stock buyers.
All right, great. Yeah, that was a great chart when it came out. It was such of interest to students, and it just pinpoints, those cyclical reactions so well.
And we're seeing the phenomenon unfolding as we thought it would. So we're seeing confirmation that this theme is working out that way.
And then the question became is, well, what's the potential? What's the potential for the current market? Where could we potentially go? And this is kind of like a secret slide that, we had, because some of the counts we don't show, just not to attract, I guess, first too much attention to those counts. But the counts that we've published were the campaign count and the trade count. So 35 and 35. These counts are confirming counts, and this is what we're looking at. But for our WMD subscribers, obviously, we show everything. So this was the most aggressive count that we could find. And Bruce also, has published, this count over 5,000. So we're seeing this as a very interesting long-term objective. How quickly we're going to get there, we will see. It looks like we might actually accelerate in the trend at some point. But our first targets are still 3,500. Until we hit this, we're not going to talk about any other counts. Bruce?
Yeah, so again, the extreme value that point and figure gives us in terms of the potential or extent that a market can run to. Ramon showed you some that great S&P chart, which had 3 different uh, signals or elements pointing to 3,500 on the S&P, and here we have this great, very large point and figure. This is the 3rd turning, by the way, this whole structure. And you can see here 3,500 is being counted a couple of different ways and showing us that as a target area. But then there's more to come, which may involve more reaccumulation counts along the way up.
All right, great. Let's jump to something else. Oil. This is more of the current picture. This is weekly. We've been following oil very closely. It's one of our favorite instruments to talk and to trade. And just that there is a lot of good moves in oil. And what we've been noticing lately is an area of absorption that goes into some kind of apex long-term formation. Usually out of those, the runs are really fast. And as we look at the upsloping structure here, we're thinking about the breakout above 60, a breakout above 68 and 72 that could potentially lead to 80. I would say that this is kind of like the most probable direction of the uptrend if the uptrend is confirmed. For the confirmation, we would need to break out, and we would need to kind of like go in steps and get there like this. But the move there could be a little bit more laborious than I'm drawing here. Bruce, what are your thoughts on oil?
Well, I think it's very exciting because first of all, we've talked about this extensively, is that 2020 is set up to be a good year for the economy. And if the economy heats back up in 2020, it's also going to create demand for crude oil, not only domestically, but around the world. And we're starting to see China coming back to life also. So there's big demand out there in the next year for crude oil. And then also the oil stocks, the oil sector is deeply undervalued and has tremendous dividend yields. So think back to our prior discussion about dividends. So there's natural demand that could go to the oil stocks from the bond arena. And so there's a lot of reasons to think that crude oil could be an important segment of the market in 2020.
All right, let's jump to something else really quickly. I don't know how much time we have left.
About a minute. We have about a minute. So just high points.
I thought, we were so right on, Bruce, on gold. Not just short term, not just long term, but character wise and the rally that has happened. We caught, in both places during 2019. So I thought that was a really good year for us in gold.
This is a historic chart that we did for WMD, but also I published it in a blog. We actually have touched 1550 before pulling back. It's been a very normal, gentle backup that's occurred in the structure of this very large accumulation area. And then also below, you can see there's a daily chart on the left and then point and figure. And the point and figure is already outstripped the prices outstripped the highest count that we generated there. So that's pretty exciting. So in conclusion, join us on January 8th as we begin our 2020 Wyckoff Market Discussion season. Be part of our family. We'd love to have you join us at least for that session and then beyond. So with that, Ramon, thank you so much for being here.
Thank you.
And we'll see you next time.